Hi everyone. Do you feel like everything is getting very expensive? Whether you take the example of your grocery bills, or you take the example of your utility bills, or take the example of mortgage repayments, especially in the days of these high interest rates, it is putting a lot of pressures on our wallets, especially the people who have got the mortgage repayments with them. RBI is keeping the high interest rates high to slow down the economy, to slow down the spendings, but it is hurting us a lot. And people like me who have got the mortgage repayments every month, and especially with the people with mortgage, they feel like they are into the mortgage prison for another 35 years or 30 years. So with the economy these days, the consumer confidence is low, spending is low, but the interest rates are still very high. But what if I told you there are some strategies which we can implement in our daily routine, which will help us in fighting with these increasing interest rates and will help us in accelerating the mortgage repayments? I am not talking about just adding another $100 and $200 in our monthly payments. I will be talking about the strategies which we can implement in order to increase the frequency of the payments, or and making the 30 years term lower to 25 years, 20 years, even maybe 15 years. So if you are interested in knowing these strategies, so that we can thrive in this economy rather than just surviving in economy, and if you are ready to take control of your finances, keep watching. Hi guys, this is John from Admire Property Group. I'm running an independent buyers agency where we help our clients in acquiring high performing real estate assets, which grow in value faster with time and give you extra rental income, cash flow, basically making it a self-sustainable real estate asset that doesn't put a lot of pressure on your finances and navigates you to the financial freedom eventually. So let's dive into the strategies now. The first strategy is changing the frequency of your payments. So this is one of the most important tips which most of us don't know. By switching from monthly to fortnightly payments, we can save a lot of time in a long term. So if you go to the screen, I will take an example of a loan which is $700,000, and the interest rate in this example is 6%, and the loan term we are taking as a 30 years loan. So if you have got a loan of $700,000 with the interest rate of 6% for 30 years, the monthly repayments will be closer to $4,196. And the interest which you will pay in 30 years term is $810,000 in total. And now, if rather than paying on monthly basis, if you change your frequency from monthly to fortnightly, let's see what are the figures now. So with the same loan of $700,000 and interest rate 6% and the loan term 30 years, if you switch over to the fortnightly payment, you can see the repayments will be closer to the half of the previous repayments, which is $2,098. But because you are paying on faster frequency, the total interest paid will be $637,000 roughly in 30 years. So because of the increased frequency of the repayments, the interest saving is closer to $173,000. So just by making a small tweak in your payment schedule, you are saving $173,000 over a term of 30 years. So basically, if you talk in terms of the time saved, so you will be saving another 5.5 years in your 30 years loan term. So it means rather than taking the 30 years, you will pay your loan in 25 years. So you have saved more than 5.5 years in your loan term. And if you take an example of the weekly payment with the same loan, same interest rate, same loan term, if we go for the weekly payments, there is not a big difference from fortnightly to weekly. The interest saving is very much closer to the previous interest save. So rather than going to the weekly payments, which could be a nuisance for you, but it depends. If you are getting paid weekly, you can go for the weekly payment. But for most of us, the weekly payments will be a nuisance. But going to the fortnightly payments can save us another 5.5 years for a loan of $700,000. And it depends on the loan amount you have. If you got $1 million as a loan, it could be different numbers or different savings in that time. But for example, of $700,000, it's saving us more than 5.5 years in our loan. And the reason why there is a big difference in the loan term for switching from monthly to fortnightly payment is, the first one is bank charges us interest on daily basis. It is not like at the end of month, they will calculate and will charge us. They charge the interest on daily basis. And the other point is when you are paying on monthly basis, you are paying once in a month. So in a year, you are making 12 payments. Because when you switch over to fortnightly payments, there are 26 fortnights in a year. So rather than making 24 repayments, you will be making 26 repayments. So basically, you are putting 1 month of extra repayments when you are switching to the fortnightly payments. That's why it's helping us in reducing the term years, and that's saving us a lot of interest because interest is calculated on daily basis. And guys, whatever advice I'm giving on this video, please make sure you talk to a professional before considering this advice and before implementing this advice in your life, because I'm just a guy on YouTube giving you the information. Please don't consider this as a financial advice for your circumstance. So by just making a tweak in our monthly schedule, we can save 5.5 years worth of interest from our loan repayments. Let's see and move to the next strategy and see what we can do to reduce the time further. So the next strategy or the next tip is making extra repayments. So I will be taking the same example, but I'll be using a different calculator because there are different calculators for different strategies. So I'm taking the same example of $700,000 loan for 30 years and at an interest rate of 6%. So with this one, if you see on the screen, if you are not doing any extra repayments, your monthly repayments is coming out to be $4,196, which is a little bit different from the previous calculator I used, but they are most likely the same, and the figures could be little up and down, but they would be close. For this example of $700,000, the repayment would be roughly 4,100 or 4,200, you can say. Consider you have got a family income of $150,000 or maybe $200,000, and you can save $1,000 every month by after paying all your expenses, all your repayments. So rather than keeping those $1,000 in a normal saving account, so what you can do is you can wire your brain to pay another $500 towards the loan payments. And let's see if we pay an extra repayment of $500 towards the loan, what kind of difference it makes in the payments. So now this example where I'm taking the same example of $700,000 and with an extra repayment of $500 every month, if you see that the savings in interest is closer to $223,000, which equates to 7 years worth of payments from the loan. So rather than paying the loan in 30 years, you will pay the loan in roughly 23 years by just making another $500 worth of payments on monthly basis. And what if you mix this strategy with the other strategy of paying on fortnightly basis? That will even make a bigger difference in your payments. That might save you maybe another 10 years from your loan, depending on what type of loan have you got and how much loan have you got. So it depends upon your saving budget. Like the higher the extra repayments you can make on monthly basis or fortnightly basis, the higher the interest rate you will be saving in a term of 30 years. So by just making some tweaks in your payment schedule or paying a little bit extra and wiring your brain to do these things on consistent basis, you can save up to 10 years in your loan term. And if you are mixing this extra repayment strategies with the fortnightly payments, you will be paying these extra repayments twice in a month. Like rather than paying $500 in a month, you will be paying $250 every fortnight. So that will help in reducing the interest further because, as I said before, interest is calculated on daily basis. And moreover, with the increased frequency, you will be paying extra repayments in a year rather than going for the monthly payments. I hope you are liking these strategies, guys. These are just the two strategies which I have mentioned as of now. I have got some more strategies. And if you are liking these strategies, make sure you click on the subscribe button and hit the like button. And make sure you forward it to your friends who can take benefit of these tips and can help in reducing their home loan faster. So the next tip is having an offset account linked to your home loan. So I've seen a lot of clients where the bankers or the lenders have set up the offset account for them, but they don't know like what an offset account is and how to use an offset account. So an offset account is account or a daily or everyday transaction account which is linked to your home loan, and that offsets the amount, the balance you have got in that account from the loan. For example, if you got a loan of $500,000 and you have got $20,000 savings in your offset account, so the bank will calculate the interest on $500,000 minus $20,000, which is $480,000. So the bank will calculate the interest on $480,000 and will not calculate any interest on $20,000 because interest is calculated on daily basis and it will be calculated on that amount. So we will move on to the same example of $700,000 and with the same interest rate of 6% for 30 years and see what kind of difference can an offset account make. So if you got a savings of $20,000, so rather than keeping it in a normal savings account, if you put that $20,000 in that offset account, then let's see what kind of difference it makes. So in this example, the amount is same, $700,000. Loan period is 30 years, interest rate is 6%. And on monthly basis, if we keep $20,000 in an offset account, so it will save us interest of worth 1 years and 10 months, which is equal to like $92,000. So it doesn't look like a big saving, but if you see, like you can finish your home loan 2 years before the time, it will be a big difference. So now if we have more savings in the offset account, like what you can do is like you can have your paycheck come into the offset account every month, or whatever savings have you got, put it in the offset account uh, and see it makes a big difference. So if rather than having a $20,000 of savings in offset account, if the uh, savings, if the offset savings becomes $100,000, and if you keep $100,000 in your offset account, then it will make a big difference. It will reduce your terms by 7 years, and it will save roughly $355,000 of interest. So this is the third strategy. So by increasing the payment frequency, by paying extra repayments, and by keeping money in the offset account, which is linked to the home loan, can make a big difference in the terms of your loan. I'm not asking you to use all these strategies at the same time. But even if you use one strategy, two strategy, or all the three strategies, that will make a big difference in your repayment terms. And the next tip, which is like try to consolidate your loans. Like consolidation means, like for example, if you have got a home loan at 6%, and on the other side you have got some personal loan at 11%, 12%, or you have got a car loan at 10%, and you are making the payments for those every month, what you can do is check with the lender and see if you have got the equity in your home. So if you have got the equity, what you can do is take the equity out of that home and pay for those loans which are at higher interest, and consolidate those loans with the home loan which is at 6%. I know we are talking about reducing the home loans and I am asking you to take money out of your equity, but if you consider it in the cash flow terms, the money which you are paying for the car loan at 10%, and if you start paying that money towards your home loan at 6%, there's a difference of 4%, which is helping in increasing your cash flow. And rather than using that cash flow somewhere else, just put it in your home loan as an extra repayment that will help in reducing your loan faster. So rather than paying 10% interest on the car loan, it's always better to consolidate that loan towards the home loan at 6%. That will help you in saving the interest, and that will help you in increasing your cash flow on monthly basis. So rather than using that cash flow on some extra thing, just put it in towards your home. And if you want to know what equity is and how can you use equity from your property, I have made another video on equity, which you can see and come back to this video afterwards. And the next strategy, which I'm going to discuss now, is going for investments in high cash flow positive properties. I know it's very hard to find a high cash flow positive property these days, but there are options in the market. If you are very aggressive in your investment strategies and you are happy to take more risks, then there are options where you can get a very high cash flow positive property. So in this investment, if you are getting a positive income from your property after taking all the expenses of your rental property and subtracting it from the rental income, that extra income you are getting from your high cash flow properties, that can be put towards the home loan, that will help as an extra repayments and will help in reducing your loan further. And if you buy a neutral property as well, which you can buy in these days, depending upon you choose a good location and good area. And if you don't want to take high risk, there are some properties which would be closer to neutral properties in this time of high interest rate. And when the in 1 year's time or 2 years times interest rate goes down, these properties will become a positive cash flow properties for you, and the extra cash which you get from those properties you can put towards the loan to reduce the payments of your loan. And I have already made one video on positive, negative, and neutral cash flow positive properties. And if you want to watch that video, you can click on the link above or in the description below. And coming to the last and the final tip is you always keep on checking the interest rates and search for the lower interest rate. If you don't have time, make sure you have got a good mortgage broker in your team, which will help you in checking your interest rates every 6 months or on yearly basis, and he can find out a good interest rate for you. And you can refinance your loan, go for the lower interest, and sometimes you get extra cash back by refinancing your loan, by switching your loan from one bank to other bank, and that extra cash you can put towards your home. So by checking interest rates every 6 months or yearly basis, you can get a good interest rate, and that will keep you on your toes to keep checking in the market, what's happening in the market, what kind of interest rates are going. And sometimes bank give better interest rates to their new customers, and they don't give better interest rates to their existing customers, but they attract new customers by giving them new interest rates. So guys, these are the strategies which you can implement in your life. You don't need to implement each and every strategy which I have told today, but if you implement 1, 2, 3, or 4 strategies, that will make a big difference in your repayments, and that will help in reducing your term from 30 years to 25 years or 20 years or even 15 years. So the strategies which we have discussed today is increasing the frequency of your payments from monthly to fortnightly. And the second is making extra repayments towards your loan on monthly basis or fortnightly basis and being consistent on them. And the third is having an offset account and using the offset account properly so that it offsets the home loan account. And the fourth one is consolidation of your loans. So by taking your personal loan or car loans into the home loan at a lower interest rate. And the next one was like investing into positive cash flow properties, or even you can go for good location based, neutral or little bit negatively geared properties, which will convert into a positive cash flow properties in 1 year or 2 years time, and will you give you extra cash which you can pay towards the loan. And the last one was looking for lower interest rates, or have a good mortgage broker in your team, which will help you in reassessing your situation every 6 months or even time. So having these strategies in place and keeping a check on each and everything on 6 monthly or yearly basis will help you in taking you out of your mortgage prison, and will reduce your terms from 30 years to 20 years, 15 years, or maybe 10 years, depending on your situation. So I hope you like the video, guys. If you can tell me like what strategies did you like the most out of these strategies, please make sure you comment in below and tell me like what strategies you like, and make sure you subscribe and like, and make sure to forward it to the other people who can take benefit from these strategies. And bye for today, and I will see you in my next video. Bye.